Alright traders, welcome back to the channel. Here we have a NASDAQ or NQ futures trade case study, right? A trade you could have potentially taken. I'm getting quite a lot of questions on NASDAQ, so I thought I'll make another case study to help as many people as possible. I personally trade the S&P 500. I prefer it more, but the NASDAQ is equally as good. If you could trade one, you can trade the other. So again, what we have over here is we had price giving us a minor pullback over here, right? So if we look at the most recent structure, we had a swing high over here, right? And then we had a minor pullback just over here, giving us that swing low. So from here, we had a swing low over here. So this swing low was produced just over here. And this swing low gave us our swing high, which was up here. So now we have a swing low and a swing high to deal with, right? So from here, we see prices come into a discount. So anything below that 50% level is a discount, right? So from here, we had the fair value gap that was produced on the 8th of May. And now going on to the 9th of May, which is where this buy trade could have been taken from, right? This is the case study. The first thing you want to ask yourself is you want to look left, right? You want to look left at key levels, right? Key levels are essentially fair value gaps. Which fair value gaps are being respected, right? So number one, we have a fair value gap that's just over here, right? Let's label this in blue. This blue level represents the market open from yesterday, so 14:30 UK time on the 8th of May. Going on to the next day, so the 9th of May, right, we understand we have a potential buy trade you could have taken on NASDAQ. So the thing to understand here is that the level itself, the trade itself, the trade thesis was built on the fact that we've had a discounted low and we've had a fair value gap that's been respected in line with the higher time frame narrative. And now from here, you can use the 5-minute time frame to potentially get involved. And that's what we're going to go through right now. So here on the 5-minute time frame, again, what we do is we start with the Asian range, and just before that we have the central bank dealers range, right? So essentially we see the central bank dealers range and the Asian range, which is a consolidation in price, which we refer to as the accumulation, right? So anything before the New York midnight opening price, we refer to as the market's consolidation, right? So all of this here is what we call the market's consolidation, right? This is all market consolidation, otherwise known as the accumulation phase of the market, right? So this here represents accumulation. And once we've gone through the idea of accumulation, right? Accumulation is essentially a fancy word for liquidity that's been built in the markets, right? So again, what we have is we have the Asian range low and the Asian range high. So we're going to narrow down our accumulation just at this particular range, right? Again, let's mark out the two key liquidity points. So what we have is we have a swing low, we have a high up here, the Asian range high, and we have the Asian range low, which is down here again. So as we see, right, this is the New York midnight opening price. So let's label that, right? So this vertical red line represents the New York midnight opening price. So this here represents the price, exactly what the name suggests, at 00:00 Eastern Standard Time. Let's just quickly spell that, right? 00:00 New York midnight opening price, or Eastern Standard Time, right? So this here is the interbank delivery price algorithm reset time. So now that we see the London session tear down, what we see is we see a sweep of the Asian range low. So this here represents a very key part of the markets, which we've referred to as the ICT Judah swing, or simply the manipulation in the AMD, right? So first we started off with the accumulation. So this is A for accumulation, right? Now we have M, which stands for manipulation. So the manipulation itself is characterized by the ICT Judah swing. And you want to ask yourself, what makes a Judah swing valid? I made separate videos on this, but we're going to keep going over this because this is essentially the bread and butter of the market and how it works from a liquidity standpoint, right? The market has swept the Asian range low before shifting structure to the upside, right? So what we see is we see a pretty sharp aggressive move down before we see a bullish break of structure to the upside, before we see an aggressive move to the upside, right? Just like this, right? So what we've seen is we've seen a confirmed structural break or a market structure shift, MSS. So we've seen a confirmed market structure shift as well as a sweep of sell side liquidity. This is what we refer to as the Judah swing or the ICT Judah swing, or simply the manipulation. Some people refer to it as a turtle soup. So what this move essentially does is it entices early buyers into the market. So the market itself, the uninformed traders will look at this and think, let's sell. Right, let's sell, let's get involved. And obviously you understand that the higher time frame narratives are bullish. So this Judah swing over here gives rise to, a lot of them get slaughtered, as you can see, as the Asian range high then becomes a target. So this is an enticement of early sellers. Hence we call it a manipulation, because it's tricking traders, it's trapping traders. onto the other side of the market. And now from here, what we see is we see the market again giving us a mitigation right down into the Judas swing, respecting the Judas swing itself before breaking structure again to the upside. So we've had two confirmed breaks of structure, right? Two confirmed structural breaks, right? Excellent. So now we've had a confirmed break of structure. So we've had a shift of market structure and we've had a break of market structure. So what is the difference to quickly go over? To quickly go over that is once we've had bearish structure, the first break is a shift. This is a shift of market structure. The second break is a break of structure. The third break is a break of structure. So we want to see the market shift structure and then break structure. Very, very important to get this order right. So now that we've had this, right, what we understand is that we saw the market open at 2:30 UK time or 9:30 Eastern. The market saw an open. Yes, this is another form of manipulation. Market manipulation can often do this, right? We have essentially the Judas swing and we have the market open manipulation, is what I call this, before giving us a breaker structure to the upside. Bearing in mind the higher time frames are bullish. So how can you get involved with this bullish scenario? So the first thing to understand is our job is to key off an order block. When does the order block itself occur, right? So a couple of things about the order block, right? So when we see an order block, not just on NASDAQ, on SPY, on the Forex pairs, indices, you name it, even crypto, the order block itself must break structure. We must leave a fair value gap, a time-based fair value gap, and we must be priced in the discount in this case as we're looking to take a potential buy trade, okay? So now that we're in the discount itself, let's go over the other rules of an order block, right? So the order block itself has to be time-based, right? So what do I mean by time-based, right? So a lot of people get their times mixed up with ICT. They often think ICT is this time or that time. The truth is, right, when you're looking for an order block, the time for an order block itself, and therefore the time in which the fair value gap and the break of structure should occur, it's pretty simple, right? The markets itself open at 9:30 Eastern time, and you typically want to be done trading at 11 o'clock, right, Eastern Standard Time. So wherever you are around the world, calibrate this to wherever you are around the world. You want to ensure your order block breaks swing structure between these times, right? 9:30 to 11 is your golden time for NASDAQ. Let's even label this so people understand, right? This is for NQ or NASDAQ. This is for US 30. This is for the S&P 500 or ES, All the indices and futures follow the same time. If you can look for an order block in line with the higher time frame from 9:30 a.m. to 11 a.m. Eastern Standard Time, you are golden. Okay, so now with that out of the way, let's keep the time so people really understand. This is the main thing when it comes to this ICT case study, right? 9:30 to 11 a.m. is your overall timings, right? So from here, notice how we've had two breaks of structure to the upside. So we've had a bullish break over here, shift of market structure, then a break of market structure. So from here, you want to understand where your dealing range is situated, right? So what we do is we have a swing low down here, and we have a swing high all the way up here. So we have a swing low up to a swing high. So we have a dealing range that's been established, right? We've had a break of structure, we have a dealing range, we have a discount. So notice how prices come just below that 50% level, which represents a discounted retracement. And this is not an accident, right? This is just how the markets work, right? Precision is what we need as ICT traders, right? Notice how we have a fair value gap in price just over here. So this now represents a key fair value gap in price, right? So our job as traders is to key off the fair value gap, ensuring that we are near a discount at least, right? If we're not in a discount, we want to be at least near the equilibrium because we don't want to be buying too high relative to the dealing range, right? Basic SMC concept, not even ICT concepts, right? So again, from here, a safe stop loss for me will be just below this kind of wick over here. Again, there's no inefficiency, so price doesn't have any risk of getting down here. And now the next question becomes, well, where do you target, right? So because the higher time frames itself are bullish, you can ride this trade up to a 1 to 2 or 1 to 3 RR, right? Simply following the rules. I believe this trade did go up to 1 to 4 or 1 to 5. It was a massive trade, massive swing trade that gave massive potential, but obviously we're not holding that full volume. The main thing you want to understand from this trade is that, yes, we have an accumulation. Yes, we have the ICT Judas swing here in yellow, which is the manipulation. And our job is to key off an order block, right? And that is the secret to catching the distribution, right? The order block or the OB gives rise to the distribution. And us as traders, we want to be analyzing the distribution phase in order to find, we want to be, sorry, I've got this mixed up. We want to find the correct order block, which then allows us to ride the distribution. And the secret to doing that is to understand the time in which it occurs, 9:30 to 11 a.m. Eastern Standard Time.